Welcome back. We are about 8 minutes away from the numbers. We are waiting on the jobs data for the month of February. And futures this morning are lower going into the number. Dow Industrial is down 280. The S&P is down 42. And the Nasdaq down 208. Yields right now look like this. Take a look at interest rates. We're actually 12 minutes away. The yield on the 10 years up 3 basis points right now going into the February jobs report at 4.16%. The February jobs report, as I mentioned, out in 11 minutes. Economists are expecting a gain in jobs of 59,000, with the unemployment rate holding steady at 4.3%. We also have January retail sales coming out, so we'll get you those numbers as well. We could see a market impact here. Let's get into it with Allianz Chief Economic Advisor, Wharton Professor, and Gramercy Funds Management Chairman, Mohamed El-Erian. Mohamed, good to see you. Thank you so much for being here. A couple of things we've been talking about with regard to jobs. People are worried about AI. You've had a number of companies talk about a pause in hiring. They're going to cut jobs because of AI. But at the same time, we've got a massive productivity boom underway in America. What is your assessment of the jobs picture today?
So I think the consensus is for the so-called low hire, low fire economy, about 60,000 new jobs, unemployment steady. But this is going to be a noisy report. We had strikes, we had bad weather, we're having some annual revision. So it's going to be very hard to determine exactly what's going on in the labor market from this single report. Also, Maria, with what else is going on right now, the data may be stale in terms of looking forward. So there's going to be limited information content from this report. Other data suggests that the economy remains resilient, that the labor market remains solid, and we're going to see retail sales. Hopefully the consumer will also remain solid.
Yeah. Well, look, this economy feels very good to me as well. I agree with you. But what about the price of oil, Mohamed? Oil prices, of course, have been surging in the middle of this war in Iran. Prices not seen since July 2024. And then you've got this dramatic prediction from the Qatari energy minister this morning. He's telling the Financial Times, and everybody's writing about it, that all Gulf energy exporters could shut down within weeks and drive oil prices to $150 a barrel. Oil right now at 85.80. Tanker traffic through the Strait of Hormuz, of course, have slowed significantly after these attacks, because the insurance companies don't want to insure. I mean, no, the U.S. did not shut down the Strait of Hormuz, and no, Israel and Iran did not shut down the Strait. But the insurance companies don't want to insure, and so the ships and the tankers are afraid to pass through. Gasoline prices jumping. Brent is up 25% since February 27th, Mohamed. Crude oil's up 28.4% since the end of February, the day before this war in Iran started. What's your take on the impact here?
All these are the unintended consequences of the war. So higher oil prices is also pushing interest rates higher. So affordability is going to come under pressure. Supply chains are being disrupted. Now, the hope, Maria, is that all this is temporary. That is the mindset of the market right now. Yes, it is a shock in the short term, but we will pass it. What the Qatari official was trying to tell the world is be careful. There are what's called multiple equilibria. The further away you go from your initial conditions, the more likely you are to go even further away. That's what he's warning against. And that has to do with the dynamics of inventory. They have to stop production at some point. So we are at a very delicate point for the economy. And a lot will depend on the duration and spread of this war.
Yeah, that makes a lot of sense. Okay, Mohamed, I know that you're going to be part of our all hands on deck when these numbers come out. Stay right there. We're going to slip in a break, and then we've got the breaking data on the other side of this break. Stay with us, everybody. We are now 8 minutes away from the jobs data. You're watching Mornings with Maria, live on Fox Business.